I'm Jarosław Bełdowski from Warsaw School of Economics, and I have two great speakers today. Ido Baum from Chaim Strick's School of Law, College of Management, Rishon, and Adam Cook from the European Master in Law and Economics. We have to be fair that we are connected. I'm friend with Ido, I'm your teacher, but soon you will graduate. So whoever is going to see us, then they will see Adam Cook, not that's
I'm
that's
just happy to be here.
yes,
Thank you for having me.
you are relieved a bit. But what I really wanted to talk today is we start a new series where we bring a bit more capital markets to the financial thoughts, because it's always the competition between how I put my $1 or €1 to what avenue shall I go? Yes, that means shall I go to the bank? Shall I go to the capital market? That means stock exchange. What shall I do with this €1? If I ask my kids, they would definitely say buy something. For me, that's for
Spend.
sure.
Yes.
Spend the money.
Spend
Yes.
now.
But this is a prudent financial podcast, so then we need to touch upon serious things. And the serious thing for today, and I'm sure that both of you are very knowledgeable in this regard, is that why Europe is different from America in terms of the market, the financial market. Ido.
Well, I would start with history, right? Where would people go to get their money to start a business? 400, 500 years ago, they would go to a bank, right?
Well,
Or something close to
no,
the kind of banks that we know.
I disagree with you. They will go to the family or to the friends.
Okay.
You
We start
agree?
friends. Yeah, that's how startups work, right? You start with your friends, then you go to the family, and then when you need to grow, you go to the third F, the fools.
Sure.
Right.
I like it.
Right. So yeah, but when we start growing from the family business to a business, to a larger business, then you need finance, right? This is what this podcast is all about. And then people would go to banks. And banks were lenders. They were experts in lending, right? And this kind of business grew, and the market for finance grew. So there were more banks, right? And some regional banks and various associations that acted as banks. So we started from banking, right? But I think at a certain point, businesses scaled, and the risk of businesses also scaled, and they became risky. Now banks, they lend money. If we ignore the legalities of this issue, they lend the money of the people who invest in the banks, who are saving in the banks. So banks tend to be prudent, like you said, and
Well, they have to protect depositors,
right.
because this is what I always say. The bank is not a charity. Yeah. It
Can't be.
takes the money from the market, protects the money, and tries to make magic. What is magic? Multiply the money it gets from the market. Yes. The magic number is 7, which we all know. That means if I get €1, I can make €7 out of this €1. Yes, of course there are many limitations, and it's never €7. Yeah, so
And you're usually, as a bank, you are lending money that is not only depositors' money, but also money from the state, right?
well, it depends. It all depends. You can go to the market, issue bonds, and say, "I'm so successful, I will turn your money into the profits. Give me $1 billion, and I will pour this money into the economy by giving loans to prudent people."
Okay, so you already developed a stock market where you can sell bonds, right?
Indeed, because we have to have somewhere the market, where we trade those bonds, because
Yes.
it doesn't mean that if I buy a bond, it's for life, that means I have to start from the beginning and with a contract. I can sell my contract with a profit or without the profit, depending on the price.
Yes. Adam, if you were starting a business in the United States,
What would you
where
do?
would you go?
Where would I go? What type of business am I starting?
What would you
I'm
like to start?
let's think. My thesis right now is on hedge funds.
Okay.
So maybe I'd start a hedge fund. And I ask myself, where is the infrastructure to do something like that? Where do all of the other people that start hedge funds go? In the United States, our financial hub, I mean, it's kind of moving now, but I'd say New York. I'm going to New York.
Okay. And who'll give you the money?
Now that's a fantastic question. Depends on how good of a schmoozer I am, right? And how good my investment team is. But I'm gonna go to a bank probably a mixture of them because I'm gonna need millions of dollars to open my hedge fund. This is not a cheap business.
Right. So it's probably not going to be a depositor's bank.
Probably
It's
not.
probably going to be an investment banker.
By the
Right.
way, we need, I think, to distinguish this and say it clearly, that there are two types of banks. One is the depositor bank, that means the bank which takes your money, my money, yes, keeps, and then transforms this money into loans or other financial products. But also there are investment banks, and those banks usually they do not need any money from outside because they are well funded by wealthy people. When they put the money there and they invest on the risk, correct?
Yes. But there is a big history in the United States for banks that did both things and actually encouraged, yes, well, they did, they took deposits from the working people, but they also dealt with investment and they also tried to convince their depositors to invest in the same investments that these banks ran. And
It sounds like 1929.
it is, you know, that the famous crash, the biggest crash uh, in the history of the United States in 1929. We're close to 100 years to this event. This was a formative event in promoting legislation in the United States that separated these two banks. For those who love history, it's famous Glass-Steagall Act.
Sure.
Two members of Congress. Actually, they really hated each other, Glass and Steagall. They really hated each other, and the fact that they ended up with both their names on the law has to do with the fact that the president at the time pushed them together and said, "Yeah, we get Glass and we get Steagall together in the same act and pass." The idea was, that banks, if they take money from depositors, but also then invest in certain businesses and make money from the investments, then they have a conflict of interest with what they do with the money of their depositors. But if we then go back to look at Europe and the United States and other countries, what happens is that, in my opinion, for a burgeoning country, a developing country, it's easier to work with banks. The government wants to pour money into businesses. Businesses are relatively either small or medium size, so banks know how to give them money. They know how to track their situation, and it's easier to work with banks. Let me tell you a short story. I was once invited by one of the banks in Ethiopia to give uh, to give a talk to the directors of the bank and explain corporate governance. And when I came there, I asked, how many banks do you have in Ethiopia? They said 20. 2 national banks and 18 private banks. Now, Ethiopia is a big country,
Really?
about 100 million people, but still 20 banks is quite a lot. And I said, so you have tough competition. And they said, no. No. Why? Because the government tells each bank
What?
where to work and what to do and makes sure that every single bank makes money. So everyone's happy, right? And that's the idea. Even if you have a lot of banks, banks depend on the government in so many ways. So it's easier to control. And if you want to scale up, then you need alternative competitive methods of getting your money and less prudent ways like the venture capital that Adam is setting up,
There you go. Yeah.
right? And then in your venture capital, I don't know what's your favorite flavor in terms of investments, but they're going to be dangerous ones.
Yeah, absolutely. Yeah. And it's been very interesting reading into working with different types of investors. Banks, as I understand them, are really into insurance, and the government is really invested in making sure the banks don't do crazy things.
Right.
And so 2008, we talked a little bit about 29,
29.
but what can we say about 2008?
banks investing in really risky stuff, right?
Yeah.
Even more risky stuff, like very dangerous loans to housing,
Mm-hmm.
and then finding ways of selling it off to other investors, selling risk usually to small investors, right? Same story, variations on the same story with banks. So maybe one way of guaranteeing that the markets, financial markets work is actually, let's call it democratizing the system. If your system is controlled by a small group of financial, I wouldn't say dictators because they do have sometimes to compete, but by a small group of banks, then this group decides what to do. If the public in a bigger market can decide where to invest its, make its investment decisions in telecommunication, energy, venture capital, whatever, then your market is more democratic if it works, right? If securities markets, if these stock markets work, the question is whether they work. Right.
Well, that's a big question because I think what it stops in Europe to go into the capital market to find the money, it's the red tape. That's number one, and the cost. So I wonder how different in this regard America is, because probably the capital markets are not probably they are deeper. Yes, that means the money is there. Yes, so that means that you go to the capital market, you go to the stock exchange because you know that there will be the money there. Yes.
Yes.
By the way, the story
Because you have, this is one of the reasons. It's a good question. What causes what? But the fact is that the bigger companies are in the United States. How many European countries, European companies, do you have in the 10 largest companies in the world?
I think we checked that today, and it was
You
at
did?
most one.
One.
We didn't find any of those ones. But
Not even one. If you look at the 10 largest companies in the world, you'll find that most of them are US. There's some Chinese and some
Saudi Aramco.
yeah,
Oh, yeah.
Saudi, and they are traded in U.S. capital markets, right? Because they're so big, and they need to access pools of money that they have in the United States. I don't know if they're there because the pools are there, or the pools came there because these companies were able to scale up. But Europe is really struggling in that sense because apparently, when you become really big, the European financial system as it is, the EU financial system as it is, which is more leaning to bank dominance, is not able to help them scale up.
Indeed, but come back to the question of Adam. If Adam were here, yes, the question is whether he would go to the bank or whether he would go to the stock market with his hedge fund. Yes.
Yes, after having worked with my high net worth individuals and
You have to write your thesis before
oh
you.
my bad.
Okay,
You're right. Oh, sorry.
do remember this,
High premium.
do remember this,
Yes,
okay?
sir.
But anyway, coming back, as I said, it's the matter of red tape, not only the entry one, but you have to sustain the business on the market. That means the stock exchange, and then you have to follow the rules of the game. That means the rules of the game might be painful because you have to reveal information. And then it's not only that you have to reveal the information, you have to protect this information and give it to the public at the same time, because we will discuss that there are financial crimes. And then we will not instruct how to make them. No, no, no. We will only talk about that they exist and what law and economics tell us about those financial crimes. But coming to this, what I wanted to give you towards the end is the example of Warsaw, because Warsaw Stock Exchange came in the beginning after the transition. Transition started in 1989. Then we waited 2 years, and then stock exchange appeared. In the beginning, there was only 5 companies, but it grew. All the time, we were competing with Vienna, with what is the biggest market within the European Central or Eastern Europe. And then we were competing with Vienna. And guess what? What made the Warsaw Stock Exchange go on number one in terms of the size? What do you think, Ido? Any guess?
Well, maybe lowering lowering costs or lowering the rules regarding revealing disclosure of information, for example?
Not really.
No?
Not really. I would say the state.
Not
The
great
state.
Polish talent.
No, well,
Come
it is
on.
true. It is true. It is true. But it's the state because the state introduced pension reform and created private
Mhm.
pension funds. And those private pension funds, as well as well parts of state one, had the obligation to invest the money
Right. In the stock exchange.
into the stock. Yes, and then suddenly the money started to flow and the market became deeper and deeper. It is not as deep as the other markets, of course, in Europe, but it became superior in terms of the region.
Yes. This raises the same question that we had with banks earlier. If you have a few banks and they are connected to the government, they need a regulation of the government and they need the flows of money from the government, then the government controls the banks, right? And this becomes a political issue of power. And the same happens when pension funds become very large because people pour their pensions and they keep pouring their pensions into these pension funds and they become the major investors in the market. And then they have the same kind, they translate the same financial power to power over the government or the relationship with the government because these pension funds depend on the market working in certain ways and and the obligation of people to save money in these ways. And so they depend on the government having the rules that they want. And if they're big enough, then they will be able to exert power on the government. We see that in the United States, by the way. What are the three biggest major players in financial markets in the United States? It's not the companies, right? It's not the small retail investors. There are huge index funds, right? These manage most of the passive investments in the United States, and they're so big that if you want anything to happen in the market, you would start by going to these investors. They dominate everything unless you are someone as big as Elon Musk, for example. Then you can twist their arm.
Yeah.
Well, it sounds like James Buchanan, political economy, public choice. But I think we have to conclude this episode. And it sounds to me that we didn't really get the answer why America is so much with capital markets and why Europe is so much dominated by banks. We might say, if I'm correct, that perhaps it's easier with banks because then it's easy to control by the states. But of course, we have free market in Europe, in most, let's say, parts of Europe. In terms of America, the capital markets dominate. That's the primary source to get the money. Plus, the banks also go to these stock exchanges and they ask for the money by selling bonds or other instruments and getting the money to reinvest into the loans, correct?
Yes.
Correct. And the last question, because we are privileged here from Israel. How is Israel at the moment? Which is dominating on the banks or the capital market?
Israel historically started with bank dominance because it was a small country. It was established approximately 75 years ago, and it had a very small number of banks, and they were very, very strong politically. At a certain point, the government decided that these banks, we had our own 1929 moment of crisis. In Israel, it was in the 1980s, and then the government used this to break up the banks because the banks were investors or lenders for most of the businesses in Israel, and the government broke them and then changed the regulation, and that caused the stock exchange to flourish. And then we have also pension funds or insurance companies that are running pension funds, as you have in Poland. We have the same idea. We do have a stronger stock exchange as of the 80s, but it's always a struggle, right? Consolidation of power. I think I would say that the lesson from this is that financial power is also or can be translated to political power, and because politicians always want to be strong as well. It's a struggle,
Yeah,
right?
can't blame 'em.
Between Washington and Wall Street, right? This is the history of the United States. It happens in other places as well. They're just not as famous.
Yeah, endless tug of war.
Thanks a lot. That was very much appreciable to hear. That all depends on politics at the end. But please remember, we have the vote, yes? And
That's
it's
true.
not that we are destined to politics. We can change politics too.
That's true.
Thank you very much.
Thank you.
Thank you.